Hi, this is Kyle Markham with International Futures Group in Chicago, a division of EFG Group. I want to give you a little follow-up on the earlier video from Wednesday. Let's kind of start with broad markets, crude continuing higher. It's been peculiar with the spread market because you had a bid in the spreads for a couple of days after the video. Spreads easing back lower now, but the flat price is still pretty firm. Front month WTI actually almost tested $36. So good bounce there on a percentage basis, very significant obviously because of where crude is, but notice you've also had a significant rally in copper. The S&P market continues higher. We finally triggered the 2,000 level this morning on the good jobs number, and now we're kind of just sitting. As far as copper, big breakout on the chart. Gold market hits new highs for the year today. Commodities generally last couple of days pretty firm. You're looking at sugar and coffee, both rallying much of this week. Moving on to the grains, we talked before, I said, there's no story for corn. That hasn't changed. You did see decent exports. You did eventually see a little bit of an uptick in corn, but realize with the corn right now, we have to count it in ticks. We can't even count it in pennies because it just hardly moves. Now, wheat, on the other hand, immediately after I told you in the last video, the short side of the market was at that 140,000 mark. Open interest in the May contract up to 245,000. Here they come to short cover. We go from 442 to 464.5. Really good burst out of the wheat market. Wheat corn spread had a very large move yesterday. We're cooling it off a little bit today. It's really just a function of the short side being a little bit too large. We'll get the commitment of traders this afternoon, and we can see exactly how much they've taken off. Remember, it's as of Tuesday. Regarding the soybean market, we rotated lower. We tested the low side of the range. We held. We bounced yesterday only to give it all back. We took the May beans down to 57.5. In my mind, that was really good price action because we were retesting that level. Wheat started rallying yesterday. Beans followed suit, and beans presently up 10-11 cents and actually almost reached that 880 level. So I was looking for somewhere between 870 and 875. Went a little higher than expected. I think one of the reasons was the bid that we've had in meal. I've been downbeat on meal for some time. Finally, we get a little bit of a rally here this week. You saw them coming out of those meal oil spreads. Meal actually traded in the neighborhood of about $10 off the contract low. Did it in pretty short order, and that's why the beans have firmed. Realize when you look at the bean chart, though, it really is just a trading range, and we just have to continue to treat it accordingly. However, as we're getting more into March, like I said before, we have to figure out what kind of weather premium do we have in these products and where can we add more, etc. Corn has done effectively nothing. Can we see a 10-cent rally in corn from here in the event that the wheat and soybean markets remain firm? I think that we can, but anything more than that is going to take some kind of a catalyst. At this time, we're just not seeing it. So pretty good day for commodities across the board. Grains still have another hour and a half until they close. Right now, we're still up 10-11 in the beans. We're cooling the wheat market down 1 or 2 right now. Corn trading both sides of unchanged. So that's the end of the week comments. We will be back early next week with some more. If you have any questions, again, this is Kyle Markham with International Futures Group in Chicago.